Welcome to Talk Tickers. Today, we're digging into Gulf Island's Q2 2025 earnings. Now, on the surface, this was a clear miss, and it definitely had some investors worried. But if you look a little closer, you'll see a company that's right in the middle of a massive strategic pivot. So, the big question is all this short-term pain really setting them up for some long-term gain? Let's break it all down.
Okay, let's jump right into the numbers. The headline figure that really set the tone was the earnings per share. Wall Street, the consensus, was looking for a small profit of about 5 cents. What they got was, well, not that. That's right, a 4-cent loss. That means they missed the mark by a solid 9 cents. Now, for a smaller company like Gulf Island, that is a pretty significant miss, and it's the kind of thing that immediately makes investors start asking some tough questions. The top line, their revenue, also came in a little light at $37.5 million. What's even more notable, though, is that's a 9% drop compared to the same time last year. Management pretty much chalked this up to the timing of a few big projects.
So how did the market react to all of this? Well, it was a pretty clear, if not dramatic, thumbs down. The stock slipped almost a full % after hours. It's a signal that while investors might have heard the long-term story, it was the short-term miss that they were voting on with their wallets.
But, and this is a really important but, the headline numbers do not tell the whole story. This is where it gets really interesting. Despite that loss, their underlying profitability, or adjusted EBITDA, was still positive. And even more important, their balance sheet is an absolute fortress. We're talking over $62 million in cash and very little debt. So this isn't a company in trouble. This is a company with some serious firepower.
And this is exactly where that firepower is going. See, management wasn't just coasting through the quarter, they were actively reshaping the company. The huge move was closing the ENGlobal asset acquisition. That pushes them into new, more stable markets like automation and government services. This is the pivot. This is the new story they want you to focus on.
And this quote from the CEO, Richard Hub, lays out their playbook perfectly. What he's really saying is their strategy is to use that financial strength to buy complementary assets out of bankruptcy, just like they did with ENGlobal, and then integrate them to offer customers a much more complete turnkey solution. It's a smart play.
So what's the path forward look like? Well, management laid out a pretty clear timeline. They're basically asking investors for patience. They're telling us, hey, Q3 is going to look a lot like this past quarter while we integrate everything. The real payoff, they say, is expected to kick in starting in Q4, with the new business hopefully turning profitable sometime in 2026. And this gives us a really clear roadmap with some specific things to watch for. The first big test is a nearly $20 million steel project they expect to lock down this quarter. After that, all eyes are going to be on that Q4 report to see if that significant improvement they promised actually shows up. So, when you weigh the short-term headwinds against this long-term pivot, where do we land? We are initiating our coverage on Gulf Island with a market perform rating. Look, the comeback story is compelling, for sure, but the execution risk over the next couple of quarters is just a little too high for us. We're going to stay on the sidelines for now.
And here is our call for next quarter. We're projecting revenue to be just about flat, right around that $37 million mark. But we actually expect the EPS loss to widen a bit, probably to around -7 cents. And that's because the company is going to have to absorb a full quarter of operating losses from that ENGlobal business before any of the big synergies really start to kick in. Now, for those of you with a higher risk tolerance, this whole situation sets up a pretty interesting trade. The play is to lean into the pessimism. You use the expected weakness in Q3, driven by all those integration costs, to maybe accumulate a small position. The base case target is to get back to that $7 level where the stock was pre-earnings. And your critical checkpoint is that Q4 report. If management delivers, the story's validated. If they don't, you know the story's broken.
And one last and very important reminder, this content is for informational purposes only and is not financial advice.